let's start with the revision of section number 50. Okay, section number 50 talks about interest on delayed payment of tax. Section number 50 and rule number 88B. Okay, now let's do one thing. Section number 50 we will divide in 3 parts. Okay, section number 50 we will divide in 3 parts. Part number 1 is such a case where you have not filed your GSTR return on time. That is, you have not filed your GSTR return on or before the due date, and there is some tax payable. Okay, there is some tax payable and you have not even filed your return, means you have not even done the payment of the taxes, and you have filed the return belatedly. If you have filed the return belatedly and there is some tax payable, then can we say there will be some interest applicable there? Yes. Now, let's say your output tax payable is, let's say for example 1 lakh rupees, output tax payable 1 lakh rupees, and you have got some input tax credit, let's say of 60,000 rupees. Okay, so can we say the 60,000 we will use it against the output tax liability, and through cash ledger now we will have to pay balance 40,000. So interest will be attracted only on this balance 40,000. Okay, why is it not attracted on the gross 1 lakh rupee? Because out of 1 lakh, 60,000 ITC that you claimed, can we say that amount is anyway kept with the government? If that is kept with the government, then on that we are not liable to pay any interest. Therefore, interest will come only on the net liability. Okay, this interest will come at the rate of 18%. That is the interest rate at present. And this will come for what period now? Okay, it will come for what period? So whatever was the original due date, can we say by that date we should have done the payment, but we did not do the payment by that day. So immediately from the next day after the due date, immediately from the next day after the due date till the actual date of payment, from the next day after the due date till the actual date of payment, you will be liable to pay the interest. I hope I am very clear till here. Yes, this is the first part. This is the first part of interest. Okay, and then there was a small amendment here. Acha, let's say now in our case, whatever figures I gave you, 1 lakh rupees, 60,000, 40,000, do you recollect the figures? Yes, now in this case, let's say 40,000 was the net tax payable. What if you had deposited 40,000 in the electronic cash ledger before the due date of filing the return? Before the due date, you did not use that amount to pay the taxes and file the return, but you have deposited some amount in your from your bank account to the electronic cash ledger before the due date of filing the return. Means, can we say that amount is also kept with the government now? So, if that 40,000 was already deposited in the electronic cash ledger and just the mistake that happened from you was you did not file the return, then in that case, can we say that 60,000 of ITC is anyway kept with the government? This 40,000 is also deposited in the electronic cash ledger. So in that case, no tax, no interest will be payable, because here the net tax liability will be considered as 0. Are you understanding this? Yes? Okay. Then after that, second part. Okay, second part is such a case where interest is payable. Okay, under the same subsection 1, the interest will be payable. But what mistake happened here is, the return which you had filed. Okay, the return, let's say for the month of April, the return for the month of April was due. You paid the taxes, you filed the return. Okay, whatever was the due date, as per the due date, you filed the return. But later you come to know that some transaction was missed. Maybe some transaction was missed in that particular return, or there is some tax payable pertaining to that return now. Pertaining to the month of April, there is some tax which is still due. Now the original return was filed on time, right? So the first part of interest will not be applicable. So for this they are telling that, okay, let's say later we realize that 30,000 rupees of tax was short paid. Okay, 30,000 rupees of tax was short paid. So now you will have to pay it. Okay, you see, return was already filed earlier. That is gone. So now can we say for the further months, whenever you are filing the return, at that time you will pay this balance tax. So let's say 30,000 rupees was the tax short paid. So can we say interest will be applicable on this entire 30,000? Yes. So 30,000 multiplied by 18%, multiplied by what period? Again same period. The due date was that, right? The due date is already gone. So the day succeeding the due date, that is The day after the due date till the actual date of payment, you will have to pay the taxes. The only difference here is in the first one, we were paying the taxes, we were paying the interest on the net tax liability. Here we are going to pay the interest on the gross liability. Whatever amount is short paid, whatever total amount is short paid, on that you will be paying the interest. Are you clear till here? And the duration from where the interest meter is going to start, that remains the same for the first 2 points, right? And the last one is when is interest, in the third case, when is interest payable? So let's say if you have wrongly availed some ITC, okay, wrongly availed some ITC and wrongly utilized the ITC, availed also as well as utilized. See, government does not have any big issue with you if you simply wrongly avail the ITC. The problem will start when you start wrong utilization of ITC. So if you have wrongly utilized the ITC, then interest will be applicable same at the rate of 18%. Okay. Now interest will be applicable at the rate of 18% on the amount of ITC wrongly utilized. From what period to what period? Now see, they say that whenever you have wrongly utilized the ITC, you will have to pay it back to the government, you will have to reverse it back, right? So from the date of wrong utilization, till the date of reversal. From the date of wrong utilization till the date of reversal, you will have to pay interest at the rate of 18% on the amount of ITC wrongly utilized. Are you clear till here? Now the question arises, ma'am, what do you mean by date of wrong utilization? Now date of wrong, let's say I took wrong ITC in the month of April. Okay, I took wrong ITC in the month of April. So can we say when I filed the return for the month of April, at that time I wrongly utilized it? So whatever was the due date for the month of April, or the actual date of filing the return for April, whatever was the due date for April as per government, due date or the extended due date, sometimes government extend it, na? So whatever was the due date or the actual date of filing the return for that month, from there till the date of reversal, your interest is going to be applicable. Are you clear with this? Yes. So if you had filed the return, for that particular month, you wrongly utilized it. So from the due date or the actual date of filing the return till the date of wrong utilization, from there your interest meter is going to start, and at the rate of 18% it is going to be applicable. I hope I am very, very clear with this. Yes, the only thing here is, one thing that is very, very important is, you should have started utilizing that particular ITC. If you have not yet started utilizing that ITC, no interest. Okay, but if you have started utilizing that ITC, wrongly availed ITC, then the interest under section 50 is going to come up here. I hope I am very, very clear with this. Yes, we have got many questions in our question bank. You can just try the questions on this. Yes, okay, in the book also we have got many questions coming up here. I hope I am clear till here, everyone. Yes, so this was all about your section number 50.